Good morning, everyone. I'd like to welcome you to our webinar today on shifting wealth and capital to women-owned businesses, the latest innovations. We're really excited about the lineup we have this morning. I'm Kristin Haffort, and I am the U.S. coordinator for a project called We Empower. And We Empower hosts regular webinars. And we hope you'll continue to follow us on empowerwomen.org. But just by way of background, We Empower is a project of UN Women, the EU, and the International Labour Organization. And we focus on women's economic empowerment in G7 countries. And so we know we have a wide audience here today, both from G7 countries and from all over the world. And I think this advice that we're about to get and guidance will be helpful for everyone. But our program is really focused around, getting the private sector to really make changes and invest in women in the workplace and in women entrepreneurs. And so it's underpinned by the women's empowerment principles, which are 7 principles that our work really is guided by, and they are really the key pillars around how to make work for women. And so what I want to let you know is that if you have questions as we get into the webinar, we'll do the Q&A at the end, but I want to let you know that you will be able to, as you can see here, type your questions into the question pane and click send. And so we will get to as many as we can. We may not be able to get to all of them. We usually can't, but we would love to hear from you and just speak to the concerns that you're looking to hear about. So with that, I'm going to turn it over to our moderator, who is Shelly Bell today. Shelly Bell is the CEO of Black Girl Ventures, which is a fabulous organization that is based here in DC, but you can hardly tell because she's all over the country and the world, actually. And we are fortunate to have her as an advisory group member on our We Empower US project. And have had the fortune of working with her. She's a system disruptor and a big thinker. She's had many different companies already, but has really taken on this new endeavor of hers, but not so new. It's been around for a while now, Black Girl Ventures, to really support other women entrepreneurs, especially Black and Brown women. Here in the US, and she's been hugely successful in moving capital to women through pitch competitions and all kinds of different endeavors. So her big thinking is helping a lot of women to scale their businesses, and we're fortunate we have her time. She's been in Forbes, she's been the Entrepreneur of the Year by Technically DC, and so she knows a lot about these issues, and so we're thrilled to have her be our moderator today. So Shelly, with that, I'm going to turn it over to you, and thanks for being here for us.
Thank you. I'm so excited about today's conversation. A global good morning to all of our listeners today. We will be discussing shifting capital, wealth and capital to women business owners. If you are with us on social media, make sure you are tweeting us your gems and things that you love about the conversation at empower_women. And if you're on Facebook, you can find us at Empower Women, #women-owned business. As we know, accessing capital continues to be a great challenge for women business owners globally, including G7 countries. Today, we aim to answer questions like, how can we improve access to capital for women? What funding model works best? Bootstrapping, angel investors, venture capital. Our panel of experts will provide seasoned guidance on how to strategically plan and tackle these challenges of access. And the key word there being access, and keywords like shifting. Like, we know that there's capital available, but how do we make it available to more people, to more women? Highlighting different funding models is going to be one of the things we'll cover, and also thinking through different stages of business growth and growth risks and levels, and what that means for access. We're going to kick off today's conversation with talking about the spectrum of funding with one of our experts, and then we'll shift into another one of our experts who's a co-head of SRI Research. Our first topic, where we'll talk about the spectrum of funding, I'm going to read the first half of her bio. She is amazing. Her name is Kate Shelly Porges. She is the co-founder and managing partner of the Billion Dollar Fund for Women, a global consortium of venture funds pledged to invest in female-founded firms. She is also a board member of the Financial Alliance for Women and on the advisory board for Cornerstone Capital, Mindshift Capital, different funds, and Global Invest Her. We wanted to start the conversation with just what is the spectrum of funding available, of funding options for women at different stages of growth, different goals, and different risk levels. Shelly, I'm so happy to have you. Are you here?
Yes, absolutely. As well, Shelly, I'm excited. And hopefully everyone can keep our voices straight since our names are the same, even spelled the same. So, wonderful to be here this morning. And so excited because this is a topic, obviously, that's near and dear to my heart as the co-founder managing partner for the Billion Dollar Fund for Women. Now, you mentioned that it's a global consortium of venture funds. And so I'm not going to start there. In fact, where I'm going to start is to ask you to Imagine if Bill Gates, Mark Zuckerberg, and Steve Jobs had been born in Africa or Asia or Latin America or many communities in the US or developing countries. Imagine if they had been born in different communities than they have been. Do you think they would have realized their potential? Now imagine
Okay.
if, each of these great innovators had a sister who was equally innovative, determined, hardworking. Do you think she would have the opportunities to realize her potential? What we're talking about here is something that my former boss, Hillary Clinton, when she was Secretary of State, always said, which is that talent is universal, but opportunity is not. And access to capital is all about opportunity. It's all about ensuring that the great innovators in our midst and around the globe uh, have the access to resources, whether it's human capital or financial capital or any other kind of capital, to realize their dreams and, importantly, to realize the innovations that will improve our world. And that's what we're all about. So coming to the thought of, so let's talk a little bit about, some of the myths and then some of the realities of accessing capital. We know that, often when we talk about capital, people immediately jump to venture, and though that is my focus now, it's clearly not the answer for most companies. So let's just start there. For most companies, the way you will fund your business is very different. And there's a full spectrum, as Shelly Bell said, of resources you can consider and should consider accessing as you're building your business. First and foremost, I hope it's clear that the most important source of capital should be your customer revenue. Your business is not a business. You may have a great idea, but it's not a business unless there are customers ready and willing and able to pay for what you have to offer. So your mother may say it's a cool idea, or your cousin may, say high five, I love it, and all that kind of stuff. But if you don't have customers lining up to pay for your product, then it's not a business. So customer revenues are also important because when we move on to talking about other outside sources of funding, it's the single most important measure, if you will, that you have a business with potential. It's the single most important thing often that funders look for. So of course they'll look at you and your idea. They'll look at the size of the market and the size of the problem you're trying to solve. They will look at your team and how prepared and experienced is your team in solving this problem. But then, and importantly, they want to know, have you connected with customers, and are the customers lining up to pay for your product? So that's first and foremost is customer revenues. But beyond that, when we're looking for external funds for growth capital and other things, where might we find that? Well, first, again, always comes back to the founder or the founders, your own capital, your own funds. And many founders don't have many funds to draw from. And it's classic that in the absence of either savings or other sources of capital, whether, people have put their home, gotten home equity lines and loans if they own a home, but, many founders don't have that to tap. So where else would they get that own revenues? Well, people historically have used their credit cards. I used to work for Bank of America, before that for American Express, before I was a serial entrepreneur. And, we discovered, lo and behold, before we officially created corporate and small business cards, that people were using their personal credit cards to launch their businesses. Well, that was for us the tip off to the opportunity to launch these small business cards. Third, of course, we think of third as being friends and family, but I'd like to suggest a couple of other things even before you tap your friends and family, assuming you have friends and family to tap. And again, many founders do not have friends and family to tap, and that can be weakness. But where you can look at is if you're beginning to build a brand that is meaningful, that is taking off, that has a particular target audience that is a powerful audience, and you might consider paid sponsorships as a source of capital for events and for other, parts of what you're doing that have some physical or visible public presence. Next, we look at grants such as the Cartier Women's Initiative Awards. We look at grants because they're not what we call non-dilutive. That means you don't have to give up equity when you apply for the grant. And there are many organizations today that offer grants, everything from accelerators to local angel groups and entrepreneurs who usually do investments, but sometimes they run competitions with grants in order to identify the entrepreneurs they might then want to evaluate for actual equity funding. But before that, there would be a grant. Organizations like the Veneta Project, which does a great job of advancing women who are building businesses. And then I mentioned Cartier Women's Initiative Award, which is the largest women's business plan competition in the world, with over $1 million of non-dilutive grants every year to founders around the world. I happen to have a particular place in my heart for them because if you look at my bio, you'll see that I served as the president of the North American jury for over a decade. I was the longest serving jury member and just stepped down because of the new work that I'm doing. Which has taken over my life, I should say. So any one of these, as you move ahead, these are all great options long before you get to considering venture funding or even angel funding. And last but not least is crowdfunding. Crowdfunding is another good option, which has shown some real promise, especially for women. A recent study of rewards-based crowdfunding site Kickstarter by 2 Wharton professors found that women were 13% more likely than men to meet their Kickstarter goals. And that's despite the fact that women are not actually asking for less money, which is, what the presumption is when I say that. Another study found that in technology, an area where women are typically underrepresented, they fared even better than in all other sectors, which is unusual. And according to this research, roughly 2/3 of the tech firms started by women reach their fundraising goal on Kickstarter, compared with just 30% of the tech companies founded by men. And like I said, a key question is, were the women asking for less? Well, there was the founder of equity crowdfunding site Circle Up says that 70% of the women-led startups on Circle Up have raised money, compared with just 58% of the companies started by men. And that these were not smaller ventures, he said, the founder of Circle Up, he said that the women are asking for the same amount of money on average as the men, and that's an average of $1 million on his site. So anyway, these are all positive indicators for, changes in moving toward funding women. I will mention, although it's not necessarily for a really early stage startup the best option, but online or bank loans. Obviously, there are a lot of fintech companies now offering online loans, banks offering online loans. Usually they'll offer it to later stage companies. And then we get into the equity side instead of the lending side, where we'll start to talk about angels, super angels, and then eventually venture capital. So that's more or less the spectrum. There may be other things like, foundation grants, et cetera, but that'll give you a sense that, you really have many options that you should explore. And I didn't mention the SBA. The SBA has both SBIC loans, has their real estate loans, and other things. So depending on the nature of your business, these two, SBA in the US and equivalent organizations in other parts of the world, often offer support both for your growing business and sometimes also trade loans for if you're looking to do exchanges in trade. So I will leave it there and respond to questions at the end of our conversation. Hello.
Oh, sorry, I was on mute. Okay, I was just raving about how it's so enjoyable to listen to you talk about these things. You're such a wealth of information, and I always appreciate having conversations with you.
Thank you.
A couple of things that you mentioned were for women to keep in mind is to know their business, know their numbers, be able to feel confident communicating that, and to invest in themselves as much as they can first. And sometimes that means gaining resources, right? Sometimes that means, different ways of investing yourself if you don't have just capital within itself, but what other capital is available, right? Social
Mhm.
capital, human capital. Some of the ways that you listed on the spectrum of funding yourself could be crowdfunding, paid sponsorships, grants. I love that you mentioned paid sponsorships because I think sometimes founders take for granted the brand that they've built, which is so strong, and able to actually get sponsorships that allow them to fare and focus on revenue for their companies. Online loans, venture capital angels, and SBA or the equivalent to SBA in your country. So the next part of the conversation is us wanting to hear more about the $1 billion fund for women. And maybe I'll ask you a few guiding questions for us to jump into that. I do want to read the second half of your bio before we get started with that. Sounds good, Shelly?
Absolutely.
All right. So to complete her amazing bio, Miss Porges has served as the president of the North American jury for the Cartier Women's Initiative Awards, which she mentioned, and as a former senior advisor of the Global Entrepreneurship Program at the U.S. State Department, a program which she expanded to almost 150 countries under the Secretary Hillary Clinton. Before joining the State Department, she had a distinguished career in the private sector, including both corporate and entrepreneurial ventures. She has served as the executive head of marketing for American Express Canada and as chief marketing officer for the Bank of America. Ms. Porges has co-founded several startup ventures, including Porges Hudson Marketing, Scudder Weisel Capital LLC, and Global Payment Experts LLC. Ms. Porges holds both a BS with honors and an MPS degree from Cornell University. So I'm really wanting to hear where the $1 billion fund is going. Where is it now, and what do you want to see it do for the world? It's such an intriguing and amazing way to go about this. How did you get started? What sparked you, and where do you want to see this go?
Well, thanks for asking, Shelly. The $1 billion fund for women was an idea we came up with in response to an opportunity to present funds that would make a pledge to invest more into women-founded companies, to present them at the World Bank meetings last year, last October actually, less than a year ago, in Bali. And we said, what if we could get a group of these funds to pledge to do more, in exchange for which we'll promote them to big investors that are at the World Bank meetings and elsewhere. And so that was our simple idea. We said, how could we, could we possibly, I came up with the idea first week of last August, told the World Bank, we'll launch this, and we'll come, we hoped, with the first 100 million pledged. Of course, I had no idea whether that would actually work, but, said, I'm an entrepreneur. I said, let's go out there and let's put out our MVP and let's see if we can make it happen. And to everyone's surprise, I must admit, including my own, when we got to the World Bank meetings on October 11th, when we made our big announcement there, we were at over $460 million pledged globally from Asian funds, US, Canada, at that point, and one Middle East, North Africa fund. Since then, since achieving that, we, again, in June of this year, in the 8 months between October and June, we announced that we had met and then surpassed the $1 billion mark in pledges from global consortium of venture funds. And
Congratulations.
Well, thank you. It's been an amazing ride, amazing journey to be able to engage with so many funds from around the world And we are now on 6 continents and soon to complete the set with one more pledge we're looking for. But most importantly, having the conversations with the funds about where they are in funding women, why they are where they are, why they want to expand and are ready to pledge to do more. And the bottom line is the following: even funds that are not particularly notable for their, let's call it, advocacy on behalf of women, or not particularly notable as those seeking equity, parity, whatever you want to call it, they recognize that investing in women is investing in unique innovation and investing in returns, because research has shown that funds that have invested over the long term in women do anywhere from 23 to 63% better than male-only founding teams. And that's, despite the fact that only 2% of venture capital overall, about 2%, has gone into women-founded companies. So we've got a massive gender venture funding gap, and we have to fix it. And of course, for women of color and so forth, my other underserved communities, it's even worse than that. So we have a long way to go, and we have a lot. And the great news, to look at from the positive side, is that when we see some of the innovations being brought to the marketplace that are scalable and venture backable, we're seeing amazing opportunities to improve our lives and improve our world and even save lives. So that's what I think drives the momentum here, and we're excited about that. So that's part one. Now, you asked me, so that's been our goal number one, is to get to and exceed then the $1 billion mark, which we now have. And we still are accepting pledges, but we're not pursuing them with the same focus as we had before, because right now we're working on developing what we call 2.0, beyond the billion. And beyond the billion is a focus on different sources of capital to be brought into these venture funds so that they can keep doing the good work they're doing on the ground to invest into women-founded companies. And we want to create a virtuous cycle, if you will, of women-friendly venture funds within the larger venture ecosystem that's not so women-friendly, let's face it. So that's our goal. Our goal is to really transform and disrupt, use the popular word, disrupt the current venture marketplace by finding those funds who are at the leading edge, who are willing to take the opportunity to invest in women.
Yeah, change agents like you with ideas are vital to this process of increasing access to capital for women. So I appreciate the work you're doing. I'm sure our listeners can appreciate that work as well. I think a great way we're going to transition over to Mathilde, who's a great round out of the conversation. She also contributed to the Women Leaders Equity Fund. I'm going to read her bio, and then we'll bring in Mathilde to add to the conversation. Mathilde is the co-head of Mirova's Sustainable Investment Research Department, in charge of coordinating ESG thematic research and engagement activities. Mathilde began her career in 2007 at EthiFinance, a French CSR, corporate social responsibility, rating agency specialized in small and mid-cap companies. In 2009, she joined Natixis Asset Management. Now, over the last 10 years, Mathilde has actively participated in the development of unique ESG research methodologies for equities and green social bonds, in addition to regularly publishing articles on topics in sustainable development. She has also contributed to the development of Mirova's Women Leaders Equity Fund. She holds a master's degree in International Relations and Sciences International Relations from Sciences Bordeaux. Mathilde, I would love to hear from you. I think research is an essential part of this process. The reason that we have these numbers that tell us like how women are being invested in or how women are not being invested in. And this research is going to be essential to us. Funds or initiatives like the $1 billion Fund for Women, funds like mine, for us to be able to have more conversation and a more hearty conversation about why these gaps need to be closed. Could you tell us a little bit more about what you're working on and what you're doing?
Yeah, sure. Thank you very much for having me here. It's a pleasure. So just as a short introduction, so Mirova is a French-based asset management company. So really our work is mainly to invest at the other end of the spectrum of what you guys do is investing in companies which are listed on the stock market, so be it through equities or through bonds. And actually, we launched what we call the Mirova's Women Leaders Equity Fund earlier this year. We really had in mind, Mirova is an impact investor. So what we want to do is combine environmental and or social performance with financial performance. And we had in mind since a while already to launch a fund which is really dedicated to invest in companies which have, are really gender diversity champions. We actually started looking at investment possibilities, and what we found out is that if we wanted to invest in women-led businesses in the large corporations world, it is actually minimal. There is minimal possibility to invest. We took, for example, one of the large benchmarks in the world, which is the MSCI World Index, and we found, and that's actually over 1,600 companies. And when we looked at them, we found that only 5% of these companies were led by a woman CEO. Which is absolutely ridiculous. And even if we wanted to look at the C-suite level, so a bit broader, it was only 13% of C-suite positions which were held by women. And so we really wanted to address this first by launching a fund which invests in those few companies which are already having women at the highest level of the operations. Because it is really, in the spirit of what Mirova wants to do. So women is both, something important from an investment perspective and impact perspective, because we really think that the financial performance will be here. And Shelly mentioned that there are plenty of studies demonstrating that. So that was the idea. But actually, Mirova is a small player, and we really wanted to do more about, engaging with companies and making them realize that having gender diverse executive committees is something that is interesting for investors, and that it's worth also looking at from that perspective. So we decided to launch what we call in our small world an investor statement, which is currently open for support, and we will release it at the end of the month. The idea behind this investor statement is to gather lots of signatures from institutional investors, asset managers, insurers, pension funds, and to say collectively to the corporate world that as investors we think that gender diversity it's important for our investment decisions. And we will look and engage companies to sign the women's empowerment principles to show their commitment to having improved practices on gender diversity. We currently have over 35 signatories to our statement, and we really hope to have more by the end of the month. And we will send it to over 1,000 of companies, CEOs and CFOs, to really hope at least to get more awareness on it, and to show that the investment community is also really aware of it, and that we want the corporate world to improve in that.
Awesome. Amazing work. I think it's interesting the way that we're positioned on the call as a panel, as me and the moderator, and with you, because we have an entire pipeline represented here.
Yeah.
So it's beautiful. I'm gonna transition into a few questions, and Shelly, you can jump into these questions as well if you have any. You can jump into the answers if you have any. So one of the things that I think, like, we know the numbers, we know that everything points to investing in women. Could you both give me a little insight on why do you think these gaps continue to exist? What is happening in the marketplace? What is happening in the world that these gaps continue to exist? And what compelling arguments can help VCs understand why these gaps need to be closed?
Well, if I can jump in here and start with the end, which is the compelling argument for most investors is that you'll improve on your returns. I mean, women as a male GP of one of our first male our first fund that pledged in Canada is Marigold Capital, headed by Jonathan Hera. And as Jonathan so aptly said, in a room full of other funds that eventually signed up to and pledged to us as well, when he organized that room. He invited those folks together along with EY up in Toronto. He said, look, women are the most undervalued asset in the world. This is a huge arbitrage opportunity. As an investor, if you care nothing about equity, if you care nothing about parity, if you care nothing about the things that probably most people on this call do care about, and you only care about returns, the good news is this is the greatest strategy to get it. So that's the most compelling argument, because we could go through the many reasons why investors tell us they don't. Now, what do we know about what's actually happening in the marketplace? For venture, I can tell you that women are not only not moving ahead, we are actually moving backwards. Why? In 2015, women were getting 7% of venture capital in the US. Today it's 2.3. Why is that happening? Well, overall, just statistically, I can tell you that more and more capital, venture is growing as an asset class in terms of total dollars, and more of those dollars are growing into growth funds. It's kind of like the analog to what Mathilde was saying. But of course, you don't get to be a growth company to get growth funds invested in you if you haven't been invested in the earlier stages, which is what we're seeing happening. So it's a very big systemic problem that we have to address at all levels, but really very much in the early stages. And why is it happening? I will say, I'll just give you 3 high-level things that we've seen. First and foremost, women don't have the access even to the networks to get to the venture capitalists. I recently had a conversation with a European GP who did in the end pledge to us. But, the first conversation I had with him, he said, Shelly, women who enter our doors are treated absolutely, women who get through our doors are treated absolutely equally as well as the men. And I said, oh, that's fantastic. I said, so how many women have you actually funded? Radio silence. Radio silence. That is, he had no answer. I then said to him, well, okay, listen, let's say, we take at face value that they're treated equally when they get through your doors, but what does it take to get to and through your doors? Because what we know on the ground, working with lots and lots of women and lots of funds, is it is hard. The average founder does not have 15 venture capitalists in their neighborhood or, at their club or, at the gym or even perhaps knowing them from school. That is not the case. So even getting to your door and then through your door, if that's your perspective on life, that, once you get through our doors, you're treated equally, which we know isn't true, but okay, even if that was your perspective, it's hard to get there and through the door. Then once you get in there, what we see is that VCs, both men and women, but women less so, people, the venture fund investment managers who are making these decisions do a lot of pattern matching. What does that mean? Well, they're looking for patterns. So you'll hear things like, oh, that's the Airbnb of factories, or that's the Uber of waste management, or you'll hear them using these analogies because we get the power of Uber, we get the power. We've already seen the power of Facebook. Some of these big successful companies are now big and successful. And if you have another one that's attacking a different industry with that same model, it helps you short circuit, in a sense, your understanding. But what they also often pattern, but a lot of times women are coming with innovations that don't fit those models, but yet are addressing massive markets with massive potential. But because there's no way to analogize that, it's harder to sometimes provide the support. And then finally, I'll say that important aspect of pattern matching is, of course, who do you feel comfortable with? And when you see that only 7% of real decision makers in venture firms are women, now that's changing as more and more women are starting their own funds, including many of the ones who have pledged to us. But understanding that the vast majority of decision makers in venture firms are men, and they look at it, they look at a 23-year-old and say, oh, that looks like me when I was 23, and they may not think it consciously. It's a very much of often a subconscious bias, but it's very definitely there, and it's been proven through research and other things where anyway, we could go on about the nature of the research. So those are all important things that are preventing really viable innovations from really innovative founders, notably women, from getting funded.
Awesome. Thank you so much for sharing. I want to go to Mathilde. Could you talk to us a little bit about the investor statement and what are the expectations from the investment community on signing into the investment onto the investment statement?
Yeah, well, actually, the investor statement is, well, we think it is a great tool because it has two objectives. The first one is of course, to make the companies we invest in to react and to be more proactive on the gender diversity practices. But it's also, I mean, when reaching out collectively to our competitors and to our clients and to the invest community, it's also making them sign the statement. It's also, again, something that raises the awareness. I think that many investors somehow well know that genderless investing is something relevant, but they don't always really take the time to fully integrate it in their investment decisions. So I think that yeah, it's a way for them to reaffirm this, and also, to be honest, we as investors today who want to invest in gender diverse companies, we still lack some of well, we still lack some data, some reliable data to be able to measure the progress of companies, etc. So it's also a way to make this happen.
Awesome. What do you feel like will be the best next steps to make this happen? So with the investor statement and them signing on, what happens next? How do they follow up? How do you follow up or maintain contact with them?
So the next step is really to send this statement to CEOs. And to be honest, it's amazing because we haven't released it yet, but we talked about it already to some of the companies we invest or are in contact with, and one of them already signed the women's empowerment principle because of this statement, which has not been released yet. So I think that really following then the women's empowerment principle is obviously a very powerful tool because it really shows commitment from the top of the company. So it's just the starting point, but so it's something that we will really follow if companies are really taking that step. And of course then it implies having regular discussions with the management teams of these companies. And we are really thinking that because we feel that this subject is really gathering a lot of interest from the investment community, that we might also renew this kind of investor statement over the years to show the progress, and at the same time be more ambitious about what we ask to companies.
Yeah, I think, Shelly, that what Mathilde is doing with the investor statement, what we've done with the $1 billion fund for women and the pledges that our funds are making is similar in that we are out to inspire positive action. And, we get often asked about, well, how do the funds make those pledges? Is it a percentage increase, et cetera, et cetera. What they are doing is they're designating the dollar amount that they will invest into women-founded companies through 2020, which is a very short runway for a venture fund. But we wanted to see change in real time. We didn't want to wait a decade till all of this happened. And the important thing here is that while each of these funds has made these pledges with, I think, very sincere intention, when we get asked by the media, which we have done on a number of occasions, well, how can you make sure? Well, of course, we are going to be monitoring it. We are going out with our first survey this week to get the first round. We've also already spoken with probably about a third of our funds, and I'd estimate that we're probably at somewhere in the 25% range of already invested. Funds that had pledged earlier on have already identified deal flow, vetted that deal flow, and have already started making the investments that they've pledged to do. But the final important thing is that we're not here to blame and shame, and we aggregate the pledges. We never reveal individual pledges because we're not here to blame and shame. We want to inspire positive action. We want, and we fully expect that some funds won't actually fulfill their pledge, not because they're not well intended or working hard to do it, but because venture isn't a science. So you may or may not get there when you think you're going to get there, when you thought you would get there. But we are confident, we're quite confident that through 2020, because we've now surpassed the $1 billion mark, that even with a few of the funds not, hitting their marks or not entirely hitting their marks, that in aggregate, we will be at the $1 billion mark. And that means that we will have added to $2.7 billion global venture marketplace that goes to women. We will have added a whole billion, like about 40, almost 50% of that in the space of this, during this time period. So, inspiring positive action is critical. Providing a platform for people to engage wherever they are, whether they're already committed, not yet committed, or thinking about committing, is critical. And then for us, the other strategy that was really powerful is the, what I call a turnkey program, making it easy for them to say yes, so that, it requires very little on their side to make the pledge. It takes a lot to work through the pledge and do the hard work on the ground to make the investments. But to commit to it is a straightforward and simple process.
Mathilde, are you planning to do more research? It seems like we continuously need these numbers to make the case for the work that we do. I'm wondering, are you planning to do more research? And if so, what will be the approach to that research, and how it's going to be an asset to the work happening globally?
Yeah, sure. So actually, we released a research paper already earlier this year to taking stock of the current state of women's participation in our, so to say, investment universe, where we had this really basic conclusion that there is so much more to be done, specifically if you go on the hierarchy scale of companies. So what we plan to do is to deepen this research and find per sector what are the key levers and the key investment opportunities that we can find, and of course over time, to see if there is any progress in terms of will we have 10% of women female CEOs in our investment universe in 1 year time or 2 years time. How is it really progressing? Something that we'll certainly follow.
I'm interested to hear from both of you. What is some of the pushback that you get from asset managers? Because a lot of this, and one of the things that's so important to raising funding, is social capital. How we network, how we build our networks, and the amount of people that I can't even imagine the amount of people you may have to talk to in order to get to $1 billion, Shelly, which is super intriguing. Like I'm amazed and excited about what you're working on. But what kind of things are you hearing back from them? What are some of the reflections of the people who decide not to sign the investment statement or not to get involved in the $1 billion fund? What are some of the things that they're saying? Is it timing? Is it relationships? What can women be doing to build more relationships?
Well, I'll say that those are related questions, but certainly some different answers. So the first thing is, in terms of building the networks and building the relationships, I'll start with the last one first. We started, of course, with funds we knew and knew us, and did outreach. So my co-founder Sarah Chen, who is originally from Malaysia, had moved to the U.S. recently. Shelly, you know her well from Beacon DC here, as she's on the board. She did a lot of outreach because she came from the Asian corporate venture community. She did a lot of outreach in Asia and had a lot of success there. I started with outreach here in the U.S. and then built beyond there to funds I knew in the Middle East and Europe and in Canada from my work at the State Department. So we started with friends, and friends then referred friends. So those are the ones who said yes. The ones who said no, to get to the first question you asked, we hear everything from, one, we're already doing such a good job. And we actually hear that. Now, some of the ones who say that to us actually are doing a good job. They are actually, and they show us their stats, and they show us that they are, and most of those were women GPs. They show us that they're already over 40% invested into women-founded companies, which for some of the larger venture funds that said that to us, that is a really good statistic. It's rare. So one, they say we're already doing. There are a few who said we're doing enough, and we looked at their stats and said, well, So what's your goal? Because, you know, you say you're doing enough and you're at under 10%. What are your thoughts here? Because women are growing businesses, much there are many more women starting businesses than men are. So we try to ask the questions. We don't, pressure, because again, we're trying to inspire positive action and be inclusive. But the other thing we hear is we don't have the deal flow. We are very, let's call it sympathetic to the goal here, but we don't see the deal flow. We don't, in our sector, in our industry, and I've heard that mostly from men, but from a couple of women as well. And what we try to do there is we try to partner them or pair them or introduce them to funds that have said yes, that are in their same sector. And that are comparable size and comparable investing stages. So whether it's early, whether it's seed, Series A, Series B, whatever, to say, look, understand that you feel that way. And, you tell me that you look at hundreds, if not thousands of, companies to get down to the numbers that you invest in. So does this other company. Maybe you'd like to talk to them to see why they did pledge and how they did pledge and what they're seeing that, is different from what you're seeing. And so, we circle back with some of those. Two of them have signed on after they've had the conversation. But there are different things that we're hearing and seeing. And the last is, particularly for larger funds that have investment committees or their LPs, they have big LPs, limited partners who invest into their funds. They're just reluctant to go back to their LPs to what they consider to be changing the terms of how they invest. And so those would be the top things that we hear and see.
Awesome. As we get ready to wrap up, I'm going to start with Mathilde, and I would like to hear and I think if you could do this in a one-to-one. So one thing that women founders should be thinking about as they are seeking investment. And then one thing, since we have talked a lot about what being connected to the investment community directly and working with later stage companies, what should investors be thinking about? And for Mathilde in particular, with an investment statement, an investor statement, and then with what should founders be thinking about, and then what should investors be thinking about as we journey down this path of shifting wealth to women-owned businesses?
Yes, so I mean, I have less to say about women seeking, women founders seeking investments, but regarding the investment community investors, I think what I really want to say is that what we're doing here, I mean, this investor statement and the fact that we already have some large investors supporting it, we have to be honest and keep in mind that these investors are already investors which are aware of the importance of looking at women somehow, and they are mainly investors who more broadly are investors who are what we call responsible investors. That means that they incorporate environmental and social issues in the way they invest. But I think what I would like to have is going beyond this community, which is honestly focusing on it because it's linked to environmental and social issues, etc. But engaging the wider investment community, even those who don't have this focus, and say, well, just integrate this dimension about being sure that there is giant gender diversity in the companies you invest in, just because it's, well, we said it already, a good investment opportunity. And that would be really, going beyond the niche thing to a good reality, and that would, really integrate all investment decisions.
Awesome. Since you gave us the investment direction, Shelly, I'm going to toss it to you to give us one quick thing. We have about 4 minutes left. One quick thing that founders, I think you've given us plenty, but if there's anything that you would like to add about what women business owners should be thinking about as they're seeking investment from maybe some of the companies who have signed on to the $1 billion fund for women, any last thoughts on that?
Yeah, I mean, I'd say that if you're approaching, if you've gone through the spectrum of funding, you've built a business that's venture backable, meaning you've gotten some traction, some scale, then the things you need to look at, how aligned are you with the fund that you're approaching? So we have 80 funds on our website. You're welcome to go on the website, check them all out. Some of them will fit you, some won't. We have funds that range from ag tech, clean tech, fintech, AI, robotics, blockchains, cannabis, cyber, pretty much every major category that's being invested, we've got funds that invest in them. And of course, very small, probably components of e-commerce. And I don't know if we have any fashion beauty, to be honest, but the big tech enabled sectors we've got. But find out how aligned you are, not only in terms of sector, in terms of geography, and in terms of stage of funding, but also how aligned are you culturally? I mean, is this a fund? Don't accept money just for money's sake, even if you're feeling kind of pressured to do so. But ensure that when you're looking at investors, just as they are looking at you, are they the kind of investor who will provide you other sources of support? Will they give you access to their networks? Will they help you identify issues in your business that you might not see yourself and act as advisors in that way, and so on and so forth? So look for money, but look for smart money that will help you in other ways. That would be my key thought for founders.
Thank you so much. This has been the best breakfast a girl can have. Truly a global good morning and way to kick off a Thursday. I've enjoyed so much information. If you're listening, thank you so much for listening. And I hope you have sent us a tweet. You get the conversation is ending, never ends, truly. Now, this particular section of the conversation is wrapping up, but we always want to continue the conversation on Twitter at @empower_women, on Facebook at Empower Women. I'm going to toss it back to Kristin to close us out. I just want to thank you and women, the We Empower Project, and the leaders here for having us on the call today.
Thank you
Thanks,
so
Shelly.
much.
Thank you. Great opportunity. Appreciate it.
Thank you. Thank you so much, Shelly, and thank you to our speakers. You really did give us a rich amount of information to digest, and I know that this, I hope that everyone enjoyed this, and I know that we will be sharing this well far and beyond what just today's live version. You'll see now on your screen just 2 quick poll questions that'll pop up, and if you could just fill out the first one there, you'll see the bubbles. Just click on how informed you are now about accessing capital to women-owned businesses. And then after this, we'll just pause for a second and then put up the second question. And then after that, we'll wrap. So please select here which of the bubbles you agree with. And a second question. Okay, so we have somehow informed 29%, informed 39%, well informed 32%. Okay, so we've got quite a spread, but that's a good start. And I know this is an endless topic, so this gives us good feedback for doing even more outreach on this. Okay, second poll question. Finally, how satisfied were you with the information that you received today? Very, somehow, neither satisfied nor dissatisfied, somehow satisfied, or more information is needed. If you could choose that, then we will wrap up, and we appreciate your feedback here. This is important for our program. Okay, all right, terrific. Here we are, very satisfied, almost 40%, somewhat satisfied, 50% terrific. And more information needed. Wonderful. Thank you, everyone. Again, thank you to the speakers. And on behalf of UN Women and We Empower, we are thrilled that you were able to join us today. And we look forward to having you on our next webinar. Thanks, everyone.
Thank you.
Thank you.